Welcome to Invest and Empower. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Real estate investing. Real estate investing involves the purchase, ownership, management, rental, or sale of real estate properties for the purpose of generating income or appreciation. It can be a lucrative investment strategy with various opportunities and strategies. Here are some key aspects to consider when getting started with real estate investing. Determine your investment goals. Clarify your investment goals and objectives. Are you looking for long-term wealth accumulation, cash flow generation, or property appreciation? Identifying your goals will help you choose the right investment strategies and properties. Financial objectives. Clarify your financial objectives for real estate investing. Are you looking to generate regular income, build long-term wealth, achieve capital appreciation, or a combination of these? Understanding your desired financial outcomes will help you choose the right investment approach. Time horizon. Determine your investment time horizon, which refers to the length of time you plan to hold the investment property. Real estate investments can be short-term, fix and flip, or long-term, rental properties. Your time horizon will influence the types of properties you target and the investment strategies you employ. Risk tolerance. Assess your risk tolerance level. Real estate investing, like any investment, comes with risks, such as market fluctuations, property vacancies, and unforeseen expenses. Some strategies, such as fix and flip, may involve higher risks but potentially higher returns, while rental properties provide more stability. Consider how comfortable you are with taking on risk and align your investment goals accordingly. Cash flow versus appreciation. Determine whether you prioritize cash flow or property appreciation. Cash flow-focused investors aim to generate regular income from rental properties, while appreciation-focused investors aim to profit from property value appreciation over time. Understanding your preference will influence the types of properties and locations you target. Portfolio diversification. Consider how real estate fits into your overall investment portfolio. Real estate can provide diversification and act as a hedge against stock market volatility. Evaluate how much of your portfolio you want to allocate to real estate investments based on your risk tolerance and desired asset allocation. Understand different investment strategies. Real estate investing offers various strategies such as rental properties, fix and flip, commercial properties, vacation rentals, real estate investment trusts, REITs, and wholesaling. Each strategy has its own risks, benefits, and requirements. Research and understand the different strategies to find the one that aligns with your goals and resources. Rental properties. This strategy involves purchasing properties with the intention of renting them out to tenants. The rental income can provide ongoing cash flow and potential long-term appreciation. Rental properties can include single-family homes, multifamily properties, apartments, or commercial spaces. Fix and flip. In this strategy, investors buy properties that are undervalued or in need of renovation, make improvements, and sell them quickly for a profit. Fix and flip investments require a keen eye for property value and market trends, as well as project management skills to oversee renovations. Real estate investment trusts, REITs. REITs are investment vehicles that pool funds from multiple investors to invest in income-generating real estate assets. By investing in REITs, individuals can gain exposure to various types of real estate, such as commercial properties, residential complexes, or retail spaces, without directly owning the properties. Wholesaling. Wholesalers identify distressed properties, secure them under contract, and then assign the contract to another investor for a fee. This strategy involves minimal financial investment as wholesalers focus on finding deals and facilitating transactions, rather than purchasing and rehabilitating properties. Vacation rentals. This strategy involves purchasing properties in popular tourist destinations and renting them out on a short-term basis, typically through platforms like Airbnb or VRBO. Vacation rentals can provide attractive rental income during peak seasons, but may require active management and marketing efforts. Educate yourself. Gain knowledge and understanding of the real estate market, local regulations, financing options, property management, and investment analysis. Read books, attend seminars, take courses, or seek guidance from experienced investors or professionals to develop a solid foundation of real estate investing knowledge. Real estate investment clubs and meetups. Joining local real estate investment clubs or attending meetups can provide valuable networking opportunities and access to experienced investors. These events often feature guest speakers, panel discussions, and educational sessions on various aspects of real estate investing. Engage in discussions, ask questions, and learn from the experiences of others. Podcasts and YouTube channels. Podcasts and YouTube channels focused on real estate investing can offer valuable insights and practical advice. Many successful real estate investors and industry experts host podcasts and share their experiences, strategies, and tips. Some popular podcasts include the Bigger Pockets Real Estate Podcast, The Real Estate Guys Radio Show, and Investing in Real Estate with Clayton Morris. Real estate blogs and websites. Follow reputable real estate blogs and websites that provide educational content, market analysis, investment tips, and case studies. Some well-known real estate websites include Bigger Pockets, Investopedia, Mashvisor, and Zillow. Subscribe to their newsletters or RSS feeds to stay updated on industry trends and insights. Analyze market conditions. Evaluate the local real estate market conditions, such as supply and demand, rental rates, vacancy rates, and property appreciation trends. Consider factors like job growth, population growth, and infrastructure developments that can impact the real estate market in the area you're interested in. Supply and demand. Evaluate the balance between the supply of properties and the demand from buyers or renters. Look at factors such as the number of active listings, the average time properties spent on the market, and the vacancy rates in rental properties. A high demand with limited supply can indicate a favorable market for investors. Price trends. Study the historical and current price trends in the market. Look at the appreciation rates over time to understand how property values have changed. Analyze data on average sales prices, price-to-rent ratios, and price per square foot. This information can help you identify areas where prices are increasing or where potential bargains may exist. Economic factors. Examine the local and regional economic conditions. Consider factors such as job growth, population growth, GDP growth, and major industries in the area. A strong economy with diverse job opportunities can support a healthy real estate market. Conduct financial analysis. Perform thorough financial analysis to assess the potential returns and risks of an investment property. Consider factors such as purchase price, financing costs, ongoing expenses, property taxes, insurance, maintenance, rental income potential, cash flow, and potential appreciation. Use metrics like cap rate, cash-on-cash return, and return on investment (ROI) to evaluate the profitability of the investment. Financing options. Explore different financing options such as traditional mortgages, private loans, or partnerships to fund your real estate investments. Understand the terms, interest rates, down payment requirements, and potential risks associated with each financing option. Property selection. Identify target markets and properties that align with your investment goals. Consider factors like location, property type, condition, potential for rental income, growth prospects, and your budget. Conduct due diligence, inspect the property, review its financial history, and analyze comparable sales or rental data before making a purchase decision. Property management. Decide whether you'll manage the properties yourself or hire a property management company. Property management involves tasks like tenant screening, rent collection, maintenance, and addressing tenant concerns. If you're managing the properties yourself, be prepared to dedicate time and effort to ensure smooth operations. Risk management. Real estate investing comes with risks, such as market fluctuations, property damage, vacancies, and changes in regulations. Mitigate risks by diversifying your portfolio, maintaining adequate insurance coverage, setting aside funds for unexpected expenses, and staying informed about market trends and legal requirements. Network and build relationships. Connect with other real estate investors, industry professionals, and local experts to expand your network. Attend real estate investor meetups, join online forums, and engage in networking activities to gain insights. Learn from experienced investors and explore potential partnership opportunities. Remember that real estate investing requires careful research, analysis, and ongoing management. It's advisable to consult with professionals such as real estate agents, lawyers, and accountants to ensure compliance with local laws and to maximize your investment returns. This is it for today's video. What do you think about our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.